The U.S. economy basically at a standstill in the first 3 months of 2014. The GDP, the broadest measure of economic growth, grew at a brutally slow 0.1% annual pace through the first 3 months of the year. Some economists speculate that the stagnating growth is a result of that bad weather this winter, and it's going to come back in the spring. But we also see jobless claims rising 14,000 in the latest week to a 2-month high. Joining us now to talk about mixed economic numbers, the editorial director of Newsmax Financial Newsletters, Jeff Yastine. Jeff, thanks for coming in.
JD, Miranda.
Can you make sense of these numbers? I mean, because yesterday on Wall Street,
right,
record numbers for the stock market, and yet 0.1% GDP growth?
I think what the stock market's looking at, they're looking at things differently than you and I are. I think that the key here is really that the stock market is looking at the Federal Reserve. They're not looking at the GDP numbers except on the face of them. When they're looking at these things, they're looking at the GDP number coming in weak, 0.1%, and they're thinking the Federal Reserve is going to turn around and at some point have to start looking at either easing further or not doing as much of the tapering that they've been doing. So, you know, this time last year, they were buying $85 billion worth of bonds a month to help stimulate the economy. Now they're buying, I think it's like $55 billion. They've been bringing it down less. So less tapering is good. More easing is good, the way the stock market looks at it.
No, we've been hearing some financial experts attribute this to interest rates going down. Do you think that could be attributing to what we saw yesterday?
Yeah, it's like, you know, the 10-year isn't really yielding, it hasn't really gone up or down that much from where it was. It's down, excuse me, the Treasury yield, interest rates are up significantly from where they were a year ago, but the last 3 months, 4 months, there's really been no change.
Now, Jeff, just a couple of minutes ago, you eased into that word easing again.
Yeah.
I want to drill down a little bit.
Yeah.
You're talking about quantitative easing, correct? Right. Basically just printing more money. And when you talk about the street and everyone expecting the Fed to perhaps get back into that, I'm sorry, but from my perspective, it sounds like a junkie looking for another fix. How much longer can the Fed continue to print money and not see some sort of hyperinflation turn the United States into a variation of Argentina from years ago?
When you talk to economists and you talk to analysts on Wall Street, what they will tell you is that the Fed will continue to do it until things are, quote unquote, back to normal again. And JD, that means it could be, now look, they were talking about this 4 years ago when we were really at the cusp of the trough of the bust, and we're still not back to normal, and we probably won't be back to normal for quite a long time, for as long as the Fed continues to, as some would say, distort the economy because of these extremely low interest rates.
Would you say that's exactly what happened yesterday? Is that a result of distorting the economy?
It's distorting the stock market's view. Like, it used to be that the stock market,
bad, but hey, no, it's not
right,
that bad.
It's the weird, you know, through the looking glass aspect that the stock market is in right now. Because it used to be, as we all sort of know, if you can think back 30 or 40 years, the stock market was based on the economy. If the economy did well, the stock market did well. Now it's on something quite different. It's really more about looking at what the Fed's going to do. Is the Fed going to put more adrenaline back into the economic IV, essentially?
So, in essence, we've changed from a free market economy to an economy dependent on market distortion. An activist Fed controlling the money supply, and that amidst some other diagnostic tools. And I don't want to beat up any analyst, but we hear all this talk about algorithms, logarithms, cycles, everyone trying to make
stuff.
That, okay, that's just a trading formula.
That's
that
just
really
somebody
is not
trying to make an extra, you know, penny a share by trading, you know, through software algorithms. But it doesn't really impact the economy per se, that, you know, when we talk about algorithms.
How much does playing on the psyche, though, actually impact the economy?
Of course, because, you know, when you talk to, you know, mom and pop investor or anybody with a 401k, really what we're talking about is you're thinking Wall Street is a rigged game. And in some ways it is, if you read Michael Lewis's books and those sorts of things. But certainly what's really happening is that a great many people have ordinary people kind of turned away from the stock market. They may still contribute to their 401k or their IRA, but they're not really expecting much out of it because they think, hey, the stock market doesn't really reflect my world.
Well, as intoxicating as this topic is, and maybe it drives people to intoxication
Right.
because it's so confounding.
Right.
There are a few other things going on out there. Jeff, Yastine, last time you were here, we were talking about Comcast and Time Warner. Now, it's almost as if these communication deals are contagious. Now there's talk that AT&T is taking a look at DirecTV for acquisition. If that were to come to pass, what do you think that would mean for television or for the overall communications industry? Is it just the C word, consolidation, or is there something more at work here?
I think ultimately it is the C word, consolidation. And as you said, you were talking about contagion, another C word.
It is.
And it is, because what's happening here, there's no particular magic behind this. Comcast and Time Warner Cable, if they hook up, their footprint I think is like 30 million subscribers. And with DirecTV and AT&T hooking up, that gives them around 26 million subscribers. AT&T has a very small footprint. I think it's like 5 or 6 million subscribers for their pay TV unit. So they have to get bigger in order to compete with Comcast. But go ahead, I'm sorry.
If I'm not mistaken, I guess AT&T is using something called Uverse in terms of its viewers and its cable.
It's something they're
Right.
trying to roll that out. But again, with 5-6 million subscribers, they've got a long way to go. And as you know, churn is a big deal. A lot of people subscribe to stuff and then they drop
Is
it
this
later.
good for the consumer?
You know what? I don't think it's going to make that much of a difference, because if you only have two companies operating in a market like this, where it's relatively protected, hard to get in, because you got to string lines and all that
Right.
kind of stuff, I don't really see it being a big benefit. I think what's going to happen is they look at each other, and it's sort of like the airlines nowadays. They just see what their fares are,
Right.
what they can get away with, and do it from there. I don't think you're going to see big discounts on cable.
You know, Jeff, as you mentioned, this principle in business, and I think this is very revealing. You talk about that relatively small consumer footprint for AT&T Uverse. I believe you put it like 4 to 5 million.
I think it's like 5.6.
But-
It's
but-
rounded to 6 million.
Just a random thought that comes to me. Think about what the White House has been talking about with Obamacare. Oh, we might have 7 million, 8 million. It reflects the reality. We're a country of over 300 million people, and those numbers are a comparative drop in the bucket. So market realities in terms of state-run health care seems to be running incredibly anemic, just given the numbers we've talked about here. Let me talk about more governmental involvement. And it appears now, as is often the case, once we clear the smoke away and the creative accounting, the numbers are in. If you thought that General Motors should be called GM Government Motors, here's the report coming from Treasury. It cost American taxpayers $11 billion. Jeff, it's a real simple question. Did we as taxpayers get our money's worth, $11 billion into GM?
I'm going to sidestep that question.
Okay,
and
fair
here's
enough.
why. Here's why. Because if you talk to
got
the
it.
Treasury, they will tell you that by saving General Motors, that they saved the taxpayers additional pension obligations, somewhere between $39 billion to $100 billion. So that's sort of the way the government looks at it, is by saving, quote unquote, saving General Motors, they are actually helping to, by keeping the company on its feet, it means the government isn't on the bill to foot all the pension obligations and retiree health care obligations that would come with it.
Well, that is one way of looking at it. Of course, we should also note for the record, during my days in Washington, you would have a different way of estimating, for example, tax revenue. When we first came into the majority for the Ways and Means Committee, Washington used something called static scoring, which was really the bureaucrats saying, oh, if you cut taxes, it deprives the government of this much money. We changed that to something, for once winning a definitional contest in terms of wording. We called it reality-based scoring, where we took a look at what tax reductions would do in terms of stimulating the market. So it's interesting to hear kind of an echo of a dynamic score that the government is using, saying, hey, look, we kept these jobs intact, we saved on pensions, etc., even though it should be noted for the record that the bailout put together by the Obama administration was especially beneficent to the union movement.
Of course.
So that happens. Lots going on here. But the bottom line is it was $11 billion. Or do you think the number's accurate? You think we're going to find out it's more in the days ahead?
I was looking at a report from like December that made nearly the same number. It was like 10.5 billion. So 11 billion, it sounds about right. Whether it was worth it to preserve those jobs,
well, there were those who said you could go the bankruptcy route, still preserve the jobs. But as I hear this, Miranda, I'm reminded of the late Everett McKinley Dirksen of Illinois, who would say, $1 billion here, $1 billion there. Pretty
After
soon
a while,
you're talking real
adds
money.
up to
You're
real
more
money.
worried about the setting a precedent.
That's
anything,
true.
right.
But also, to transition to billions, imagine a nation with at least 1 billion people. The People's Republic of China is that place. And now, in terms of the economy, Jeff, it looks like communist China is about to vault past the United States. We'll talk about China economically, militarily, and basically 6 ways from Sunday when we come back. But right now, we want your comments. GM is Government Motors or General Motors? Was the bailout a good idea? Contact us via Twitter at Newsmax TV, #America's Forum. There's also email and Facebook. Stay tuned.